All right, traders, welcome to today's end of day recap as well as the end of week recap. This is Christian from Tribeca Trade Group, and it is the Friday. Happy Friday, the 20th of October. Risk disclaimer in front of you. Everything that we are going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer there. So today was monthly options expiration, but I'll tell you, just a lot of selling pressure. I don't think, well, I'm sure it influenced the market somewhat. The option flows always do to some extent, but it was just kind of more of the same. And I think right now this market is much more driven right now on what's going on, just macro related. Of course, buying and selling happens in options, it happens in stocks, it happens in futures. All of these things influence the market, but there's a lot of there's a lot weighing on the market right now. So will that change next week? I don't have the answer, but we certainly have technicals to go through and levels to watch and pay attention to. Also, Mondays, since I'm mentioning this, I'm probably jinxing it, so you can mute me for a second, but I think the last 15 Mondays, 14 of them have been up versus down. So 14 out of 15 have been positive for SPY. And then Tuesday is almost the exact opposite. I think we have 5 out of the last 15 Tuesdays that have been positive. So the turnaround on Tuesday is much more than is much worse than it used to be. Turnaround, it used to be the other way. Like historically, Mondays were usually bad for the market, and I went over all this earlier in the week, I think in Monday's video. But just rehashing because it is the end of the week and something to look at next week. Then also, before I go into any of the index levels and so forth, next week I was just listening to CNBC. They were saying that I think 150 companies in the S&P 500 report next week. So next week will be the busiest week for earnings, and we've been seeing. I think so far, there's been some upside surprises. KNX was one name that was up like 11% today, transport name. Remember, Netflix had a good beat. And then, of course, the names that are missing seem to be really getting hit hard. Solar Edge, of course, that solar name getting hit hard. Tesla continues to fall after that report. So, if you in this environment, it's kind of the bad news is getting is having more of an effect than good news right now, right? That's just the market that we're in right now. Interesting. Solar actually came up 2.5% from the open today, but still down 6% for the session. But those are some observations so far in earnings season, is that if you miss, you are really getting punished. If you do well, there's been some success stories. So I think that's what we're going to get as we progress through earnings season. But I don't have a crystal ball, and I don't know if that trend is going to continue. But I think we'll know a lot more next week. Speaking of which, I think it is around 26%. Sorry, I should say there's more than that. Of the big names that report earnings, the Microsoft, which reports on Tuesday after the close, Google also reports after the close, right? And then you get Meta, which I believe is Wednesday after the close, and then Amazon Thursday after the close. Those names that are reporting are roughly about 26% of the Qs. So it could potentially have a big effect on which way the Qs go. Now, there's other names. These are just names in the Qs that are reporting. Cadence, which I think is an interesting company, that reports Monday after the close. That name has been holding up fairly well. A couple other observations that I'll make, and then we'll talk about the price action. But I'll tell you, we had a couple on Fridays. I always do like Q&A with members, and there's always great questions by members. And one of the questions that I got from a member was, "Hey, where right now are you seeing relative strength?" And I kind of chuckled a little bit because it's been really tough, because we've certainly seen some areas that show relative strength for small periods. Sometimes it's for a couple days, sometimes for it's a little bit more than a week. But then what happens is it's very symbolic of, and I don't want to get into that bull market, bear market discussion, because people are very passionate about that discussion. But let's just say for now, there's a lot of characteristics of a bear market, right? When a name starts to break out or looks like it's pretty constructive and then it gets slammed down, right? That is very symbolic of a bear market. And we see that in a lot of stocks that look pretty good, that are or were showing relative strength. The cyber group was showing some really nice strength, right? The software group was showing some good strength. Those names got hit pretty hard today. Semis a little bit here and there have been showing strength. Insurance companies, right? Well, now look at what's happened to the insurance companies. That's not showing any relative strength anymore. So you have to be careful when the market is acting like more of a bear market. And you have to note too when the market is acting like a bull market, because in my opinion, because I'm not one of these people like that oh my God, this is when the bull market started. I could care less about that stuff. That doesn't help you make any money. That's just people who want to be right versus who more interested about being right than they are about making money. So I've thought this year there's been a few times where things felt like a bull market, and there's been other times this year where things really have felt like a bear market. And it's important to recognize that, because there are those behaviors that happen, such as breakouts fail all over the place in a bear market. So, we've been experiencing that over the last couple months. There's been a couple days where we had some strength, but it's been very short-lived, right? The end of August was strong, right? We had one nice week. Most of September was not good, right? And then in October, we've had a couple days where we've been strong. That's it. That's really it for the last 3 months. So, you can't really argue that that's a very constructive market. Now, where are we now? I've got the the weekly chart of the S&P, and we're back to basically the scene of, I don't know if I want to say it's the scene of the crime, but we held here the last time. Now we did close inside the value area. So sometimes I give these things a little bit of slack, and that hurts me a little bit, because I say, okay, well, that's close, but it's a break of the value area, right? Because I talked about how we broke the all three of the indices that I pay attention to. I pay attention to the Dow too, but I really pay attention to the S&P, Qs, and what IWM is doing. But on Wednesday, they all broke the value area for the week, and that was a point to say, that was a really good signal. I gave it a little bit more time in a couple of positions, and I paid for that a little bit yesterday. I kind of gave them a little bit of the benefit of the doubt that that they had a chance to turn around while Powell was speaking. That did not pan out, and when you do things like that, that usually hurts your P&L a little bit, and that did for me yesterday. But regardless, that's where we are right now. We've breached this value area. And again, you kind of have to think next week could be like a make or break type week with all these names reporting earnings. So I would watch this 42.57 level. That's important to me because I rely a lot on what volume at price is telling me. And there we're also testing, if you look at the daily chart, we are testing this VPOC where we had a hell of a, we had a nice bounce, right, for about a week, right? And then of course, the price action, briefly made it into the value area for the month, right? And then completely got neutralized there, and waterfall moved to the downside the last couple days. All right, so that's where that is. I'll go through all three of these really quickly. The Qs, you can see I've got a bit of a trend line drawn here. It's not perfect. Keep in mind, you could draw, I know Carter Worth says this, and I agree. You could draw trend lines anywhere you want, right? You can make your own story up with trend lines. I do pay more attention to the MarketWebs indicator, because I can't there's no discretion with that, right? 359.91, we did not hold that. We broke through the October value area. So I have no choice when these things happen, as long as I'm following my system, is to get lighter risk. When we break inside the value area, I get more positive, right? I add risk. When we break back to the downside, I remove risk. And of course I did that. I didn't wait till all the way till the end of this. I waited till we started to kind of break some of these short-term moving averages. The weekly, you don't have support nearby, so that I'm not sure if that's a good thing or a bad thing yet. We'll see if we break this. The next major support isn't down till 332. That's a big ways away. And if also you could look at that 200-day moving average. So there's nothing to say. We're not super oversold. There's nothing to prevent if these names don't deliver on earnings. And again, it's mainly going to be their guidance, right? Don't forget with earnings, people always get this confused. I see newer traders get this confused when they say, "Hey, I don't understand. The company had good earnings last quarter and the stock is down." Right. Well, that's what they did last quarter. So really what they give in terms of guidance and what they say on their earnings call will be, paramount. So we'll see if these companies deliver, because you are definitely seeing, as I've already discussed, some names kind of come out like Tesla, and they missed and they fell hard to the downside. Tesla, by the way, we could talk about that stock a little bit, and then we'll talk about some other movers. Broke the 200-day moving average and continue to fall today, down another 3.7%. We'll see if we get some type of consolidation around there. Also, when you look at the weekly chart, you've got some support here at 205, right? That was the break into the value area. Note again, these subtle little technical hints, lower highs. We talked about that not only in Tesla, on the daily chart. Right. I know a lot of people were looking to go long Tesla. Remember back in here, it gave us a nice hint of another lower high, which is technical weakness. And that was a good hint that something wasn't right in Tesla. Similar to what you're seeing in the indices, right? Lower highs all over the place. Okay. So next, again, if you don't like horror scenes, then turn your screen off, because IWM looks atrocious. I've talked about this throughout the year, saying that this is not a good place to be trying trades. It is all year long. It's been shown, except for a brief period in here, has been showing relative weakness. It does have some support to watch. So again, I think make or break week next week, right? This did clock in year lows, 165.67. And we'll see if that holds. It's really bad when you look at microcaps, right? This is the IWC, right? That is broken the range and nasty looking. One of the things that I'll say too is, looking at where we are, right? This has been tricky because everybody's been telling you about strong seasonality at this time of year, right? Again, price action, it's nice to have these things in terms of, different factors that you may pay attention to, but ultimately price action is the best, right? And I say that to members every Sunday video. I always start with, hey, we're going to look at some internals, we're going to look at some indicators, but ultimately price is what is going to be the most important factor for you, right? You could put your stops, put your targets, right? Those other things are kind of, supplemental, right? But, look at where we were last year at this time, right? So this is 1010, right? And then the week following, we did rebound. So I think kind of like this is where we were last year. It remains to be seen if we're going to see buyers come in. Just don't know if that's going to happen, right? If you were thinking that, oh my God, I'm going to go long everything because seasonality is supposed to kick in this last week, right? That didn't work out. So, I think we're going to see some type of, we're going to need to see some type of good news. And maybe that's earnings, but we'll wait and see. I think it's very much going to be a make or break week. TLT, I get a lot of questions about this, right? About what I'm seeing in the charts. Well, One thing's for certain is that support didn't hold, right? And I talked about this in the long bond. Now this is pretty oversold, so it's probably due for another bounce, right? Here's the VPOC that I did get excited about this taken out and a bounce after it, but these are battles with buyers and sellers, and the sellers have won out. So the question is, if you get that bounce, are we going to see anything more than that? I would argue that it's going to be very difficult, because anything could bounce, but there's going to be more supply that's brought onto the market. Look at all the treasury auctions that are coming up, right? Again, and pretty large treasury auctions too. So there's more supply that's coming out to the market, right? So these are things that you have to think about: demand and supply. They're bringing more and more supply, right? And I talked about this a little bit in yesterday's video, so I don't want to be too dark here, but this is something that the Treasury is going to have to continue to finance this country and the deficit. So I don't like, if you are thinking that we are in in a decent predicament in terms of debt that the country has, then why would you want to go long bonds here? Unless they start to, at least I don't even think they've begun the discussion or even open up to discussion about what kind of government projects they're going to cut. Another, right? No one's even talked about that yet. So how are bonds going to go up? I don't have the answer to that question, but these are just things that I begin to kind of think about, right? So I would like to see, what I would like to see is some stabilization. And if you look at this, what I found that was interesting today, again, kind of getting into the weeds here a little bit with the bonds, but notice what happened today, right? The yields really are starting to move lower here on the shorter end of the curve, right? This was, if you look at the 2-year, and I put this chart out earlier, but the 2-year was 5.22 and is all the way down to 5.07. So, that's also not such a bad thing, to see some areas of the curve. And again, I'm not a yield curve expert. Some people are, about when the curve uninverts, right, and about how that's bad. That could be bad for stocks. I'm not a professional yield curve specialist. All I could tell you is, like, I think yields coming down somewhere along the curve may not be such a bad thing. All right, so that's some things to talk about. Every one of these Friday videos, I go over performance. SPY for the week, SPY was down 2.9%, diamonds were down 1.6%, the small caps down 3%, Qs, right, which were showing some relative strength, they got hit the hardest this week, down 4.1%. And international markets, both EM, EFA were down almost 3%. There's your big move there in bonds, down 5% for the week. Gold, I want to talk a little bit about gold, right? That's catching some attention, right? So let's bring up gold futures here, and we'll start with the weekly chart. I find this kind of messy. I've said this all year long. It's very sideways to me. If I get involved, I will probably be a little bit late. But to me, it just looks like a lot of sideways. Now, you could make the argument that all of this sideways action is consolidation in an uptrend. Okay, I'm okay with that. But it's still, maybe it's getting out of the pattern of lower highs. But one thing that I see is that we took out a virgin point of control here and we faded, right? So I would pay attention to this level. I mentioned this in the pre-market session. That's 2001. Or just 2000 if you want to just use that. And gold is funny like that. These big levels, 2000, 2100, 20, as soon as it comes upon one of these levels, it's a very psychological type of thing. But you can go long at the 200-day moving average. But yes, I think it's notable with this. Also, why do you think gold went up so much over the last 2 weeks? Right, I would have to say it's because of these geopolitical concerns. So if you think that this is going to linger, the geopolitical crisis that we have right now on our hands, if you think things are going to get worse, then okay, this might be the trade for you. But if things simmer down, I would think gold may not do much of anything and will continue to go sideways. Again, just giving you a little bit of my perspective here. Silver, right? Because people get excited about these things. Silver is still below the 200-day moving average, right? And I can begin to kind of extend this trend line. So yes, it made a nice move, from the lows, right? That's very important to realize. It made a nice move from the lows, but it hasn't done really much else of anything. So if you made some money on this, move from the lows, congratulations. But I think now here is the heavy lifting. All right, so that's gold. I might as well talk a little bit about Bitcoin too, right? Bitcoin kind of fighting in there. But again, this is a tough chart too. It really hasn't done much for the better part of 6 months. It's just back and forth price action. And I would watch what it does here if it takes out this 30,820 VPOC. So again, it's really, I would rather sit on the sidelines than get into something, and then as soon as I get into something, it reverses. So that's kind of what I'm doing. I talked as well in the pre-market session about T-bills. I think that's important to realize as well, is that you're still getting paid quite a bit to be in Treasury futures. I've been in, T-bills, not Treasury futures, and T-bills, and I continue to roll them over. You know, what made me think of this just recently is because I got a notification from Treasury Direct. They send me emails saying, your T-bill is coming up for maturity. And then what you have to do is you have to schedule, your whether or not you want to roll, basically. So, and how many times you want to roll. So I just changed all of that. I just did a little bit of management, looking into that account. But looking at the other areas of performance. All right, so sectors. Yes, we just covered gold, but let's look at the GDX chart. The GDX finished up 1.8%. Is this a chart that I want to buy right now? I would say not necessarily. I need to see a decisive break above 29.84, and even further, maybe that 200-day moving average. Still a tough looking chart. This is the daily chart. We could look at the weekly chart, right? Again, we always want to go through our analysis and go through and see if this is something that looks appealing. It's still in the value area for the year. So I think for now, it's a pass for me on gold miners. But again, this is a good exercise to go through to see if you think that there's some other opportunities, especially in something personally that I haven't been too much involved in, because I don't like sideways charts in terms of what the gold miners are doing right now. XOP finished up 1%. The energy trade has not been easy. XOP, I think, is a very interesting weekly chart, but it did not give me the green light. What would give me the green light? It would be a close above 153.40. So despite all the rhetoric on the tape and about energy being a good trade or gold being a good trade, I've got to see better signals. XLE, it's okay looking. It's above value. It's above this little trend line or actually the price is not above the trend line to try to get there. So again, it's stalling too a bit, right? So one other sector I was going to cover too, because you got about 50% of this ETF reporting next week, which is Google and Meta. The communications have been, I think, one of the more solid areas to be in, right? The price action has been a bit tighter than, say, XLK, right? Here's XLK. So, XLC, it needs to hold this 64.34. And again, if it breaks this trend line, I'm all about it with Google and Meta reporting. Again, they're close to 50% of that ETF. Also note, I talked about how this broke, talking about what I mentioned earlier about a lot of breakouts failing. Here's one of them, right? This one actually did get out of the pattern of lower highs. but it failed, right? And it failed right at that top of value, which is 68.07. Did not have a good day today, down about 1%. Back to sideways right around the 50-day moving average, but I think this will be one to really pay attention to for clues on what could be potential leadership, but also could not be, depending on what it does next week. So I talked a little bit about T-bills, right? And until some signals really start to materialize, I think just patience, you need to have patience right now in this market and wait for some better things to come about. Again, could be with earnings next week. It could not be, right? And if we do get more oversold next week, right, then we really start to hit to a stronger seasonal period, which is November. At that point, the markets could be a bit oversold. Also note, like things like with sentiment, the BOFA bull and bear indicator, their indicator actually flashed a buy signal. So the main thing is wait for signals to occur. Don't force trades, in my opinion. Wait till have some good signals, right? And then you might be have some constructive markets and be able to earn a little bit more in this market. But if not, T-bills are not a bad place to sit and wait for things to get better and a little bit more healthy in this market. Thanks, everybody. Have a great weekend. Also, if you could like this video, that would be great. And if you want to see a closer look at Tribeca Trade Group, you could go right to our website and you can, let's see if I have this here, right? You could go right to here and you could put in your website, or you could put in your email, and you could get our end of day and midday recaps. Have a great weekend, everybody.